Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Canoo, ticker symbol GOEV. And so I wanted to do a follow-up on last week's video because some crazy stuff happened over the week. I made some good calls, some okay calls, and some not so great calls. So I just wanted to review those to see where, the price stands relative to the analysis here. And so last week's video came out on Sunday, as they typically do, following the trading day of January 26th, which was last Friday. And on that video, we had gone over how price went down over the course of the week, and I felt that price would continue down. But if we did get a close really above $17.60 for Monday, $17.10 for Tuesday, or especially $18.50, which was the high and the close on January 22nd, I thought that could be a bullish sign for the stock. And believe it or not, on Monday, the day after I put out that video, so that was Monday, January 29th, we saw a more than 20% move on the day and a close at $18.69. So just above $18.50. So that was pretty incredible. I did not really expect that to happen, but I believe I have actually called this before based on bullish divergence in the RSI. I believe I called that right before this pop up. And so that happened again with the stock. So that's pretty remarkable. Sometimes it works out. Other times, most of the times, there's usually a little bit of a lag before something like that happens. So that was pretty cool. And then over the course of the following few days, we did see price continuing higher, hitting a high of 22.19 cents on Thursday, February 1st. But on that day, we actually saw a pullback, a drawdown of 11.75% on the day, and actually we did put in a bearish engulfing candle for that day, so that is not really that great of a sign. But as you might notice, I did already do a Fibonacci retracement on that run-up, and it does look like price on Friday, February 2nd, did close at 17 cents, which is just above the 786 retracement at 16.93 cents. So that could suggest that price has settled at a bottom. I do think it's going to be pretty key what happens over the next few days. I suspect we will see some tails or wicks of candles coming down below 1693, but as long as we maintain closes right around or at that level, ideally above 1693, I do think that could be a sign that we have found a bottom and that we could get another test at 20 cents and to reclaim this high of 22.19 cents, ideally getting a close above that, which would suggest continuation higher. I'd like to fill this gap at 24.4 cents or this orange line at a quarter. So I do think that level is going to be pretty key as far as this week goes, 16.93 cents. But if that does not hold and we do see some more downside, a 100% retracement does seem feasible, and that would be coming back to a price of 15.5 cents. If price does return to that level, even if it's on Monday, that would still be on the outside of this falling wedge. So this could all serve as, return and a retest of the top of that wedge, confirming the breakout before continuation higher. We had almost seen that with this big candle breaking out of that wedge on January 8th, but it actually opened the next day well into the wedge, so we could not hold that. So now is really like the chance to claim the top of the wedge as being the floor before continuing higher. So do keep an eye out for 1550. Even if we do dip a little bit lower than that, the wedge could serve as support still, like going down to 15 cents. But really, we do want to see 1550 hold, at least for closes. If we get some dips below, no big deal. As long as we get closes above that level, I do think that could be the new floor. But if it doesn't hold, I unfortunately think that we could be seeing price dip down a little bit lower. And so in last week's video, I went over this Fibonacci retracement that includes this 1618, really an extension of that retracement, coming down to right around 12 cents. And so I had mentioned that I have this alert here at 13 cents. If price were to come down to that level, I'd be able to evaluate and see what, I wanted to do with it. And then also, doing like the same kind of thing with an extension from this retracement. I did, let's see, the exact same thing with this retracement. And so that would bring price down to 11.37 cents, and that is the 1618 Fibonacci retracement from that retracement that I did up here. It is quite possible price could be returning back into the wedge, whether it's testing 13 cents, 12 cents, or, possibly getting down to 11 cents. I do think those levels will be pretty key to hold, because I don't really see that there is much between 1550 and those levels, and really, dropping down 12 cents, just dropping dropping down to 12 cents is just lowering the price by 5 cents. So, relative to the stock price, that is a good amount, but it could definitely happen. However, though, in last week's video, I did mention that really we want to see closes at or above 17 cents by the end of the week, and that is exactly what we got. So I do think that, if we are seeing 1550 being tested, I am more inclined now to think that that will hold and that we are not going to 13 cents or lower because we are on the outside of that wedge. But if we do look at the weekly candles like I did in last week's video, I'm actually going to zoom in on this. All right, and so with this zoomed in, what we can see is last week's weekly candle was this inverted hammer. And inverted hammers, really, whether at the bottom or the top, they suggest a reversal. And so I'm pretty curious about this, because it does look like the hammer from last week, or 2 weeks ago, I should say, did suggest a reversal, and then we got that. But with this pullback, I'm wondering if this hammer candle is suggesting a reversal in the opposite direction, and that we might be hitting newer lows. And so I'm going to keep my eyes on 1550, but really hoping that we maintain closes above 1693. And if we do break below 1550, the next level that I'll be keeping my eyes on is 15 cents, really just being psychological, round number. 3 nickels or a dime and a nickel, however you want to think about it. And so that is the next level. But if that doesn't hold and we get closes below 15 cents, I think we're going to be going to 13, unfortunately, if not these lower levels. So I'm keeping my eyes on those, but I'm keeping my chin up. And, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.